class. So in today's lecture, we're going to talk about accounting. So what is accounting in layman voice? Accounting means a calculation, income and expenditure. That means accounting is a record of income and expenditure. Accounting means money diary, tracking money, how money comes and goes, plus minus, debit credit. So these are the informal terminologies that we use in our day-to-day life. So now let's come to the formal definition of accounting. So what is accounting? Accounting is a process of identifying, recording, classification, summarizing, analyzing, and communicating the financial transactions. Here, identification or identifying means collecting only the financial transactions or financial events. It doesn't record the non-financial transactions. For example, hiring or firing of employees. Similarly, recording means recording is a process of journalizing in accounting. It records according to the double entry system. The third stage, classifications. It is a process of organizing or sorting the transactions, categorizing the items according to the headings. Similarly, summarizing means it's a process of condensing and organizing the financial data. And analyzing means is a process of examining, interpreting, and evaluating financial information. Evaluation of performance using different financial ratios. And similarly, communicating, the last stage of accounting process. It includes annual reports, meeting and discussions. It involves presenting the summarized and analyzed financial information to various stakeholders. So, to note the formal definition, you can remember this keyword IRCSAC. So, the father of accounting is Luca Pacioli. He is the father of modern accounting because he originated the concept of double entry bookkeeping system in the year 1494. So he is regarded as the father of modern accounting. So now let's come to the process of accounting. So to make it clear, let's make an example. Let's say this is the sample bill or a voucher of ABC company, where the ABC company bought 10 quantity of books at 900 of $9,000. So this is the first stage of accounting process where the company will identify and collect those transactions which are expressed only in monetary terms. So after identifying and collecting, the second stage of accounting process is to record. So under recording, the company will record according to the journal book. So according to the journal book format, all the transaction will be recorded into debit and credit side according to the rules of double entry system. So after recording each transactions, each transaction will be classified according to their group. Let's say we have 10 transactions related to purchase. That means we have to record all that 10 transactions under purchase account heading. So after classification of each and every transactions, the next stage of accounting process is to summarize. So under summarization, we extract all the net balance of each headings from classifications. So under summarization, we have also the income statement and balance sheet, where the income statement shows the overall profit or loss of a company, and the balance sheet depicts the overall financial position and status of a company. So under summarization, we make prepare different kinds of reports, and after summarization, we analyze the same statement. We analyze it by using different financial ratios like current ratio, debt equity ratio, etc. So after analysis, we finally communicate the reports of a company to the stakeholders. Here stakeholder means all the customers, shareholders, employees, government, organizations, or those people who are concerned with our company. So these are the overall process of accounting. So why we need accounting? So what are the objectives of accounting? The objectives of accounting is to keep complete and systematic records, to ascertain profit or loss, to depict the financial position, to analyze and interpret the financial information, to help in determination of tax liability, So these are the main objectives of accounting. So advantage of accounting. So for advantage also we have similar points: complete records, knowledge of profitability and financial position, reduction in errors, availability of information for decision making. And after advantage we have limitations of accounting. The limitations of accounting refers to it records only monetary transactions based on historical information, ignores time value of money. For example, it shows all its assets and other items at their cost price, not at market price. So, scope of accounting, that means where we use accounting. We use accounting for business, government, non trading organizations, and for professional and individuals. So, these are the areas or field of accounting. So, what are the branches of accounting? Financial accounting, cost accounting, management accounting. So if you have any comments,